Hi there and welcome to the FOMC Minutes Preview for the April meeting. Now in terms of what we saw at the last meeting, the Fed expectedly left rates unchanged at 0.25 to 0.5%, with Fed's George, the lone dissenter, opting instead for a 25 basis point hike. Now in terms of the main commentary surrounding the meeting, we did have the initial headlines stating that the Fed had removed the reference to global events impacting on the US outlook. However, upon clearer inspection of the statement itself, we did say that they will continue to monitor inflation indicators, economic and financial events. So only in a slight contrast there to what was initially run, and we did see quite a choppy reaction across major US asset classes. Now, in terms of the minutes release itself, analysts have highlighted that the majority of the focus is to centre around the balance of risks to the US economy, whether they've increased, decreased or stayed roughly the same, and also whether there are disagreements amongst Fed members regarding those balance of risks and for future rate hikes for the remainder of the year. Also of note worth mentioning that the EU referendum vote for the UK is only just over a week after the June meeting itself. Therefore, this could be playing on Fed members' minds, and although not specifically mentioned in the last release, it may be dwelled upon within the minutes, so we're looking out for any commentary potentially surrounding the upcoming referendum. Now, also participants have noted, as is typically the case with the minutes, that it does have that dated nature, but also that Fed Chair Yellen is due to speak towards the end of the month, so may give a much clearer indication as to the June meeting. We'll also have Vice Chair Fisher due this week on Thursday. So potentially Fed speak overriding the importance of the minutes. Now finally, in terms of a market reaction, as have previously stated, due to the dated nature, could be fairly muted, as has been the case over some of the previous minutes releases. However, if we do see a clear consensus for a June hike and a balance to the US outlook being fairly minimal, then this could see some dollar strength go through the board alongside yields rising across the curve. However, if there's a lot of disagreement amongst Fed members, with June completely off the table while risks to the outlook have increased, then the adverse reaction could be seen. Thanks very much for watching. Hope you have a good evening.